Good morning, metalheads. This is Brad with the Noble Precious Metals Report, and today is July 12th, 2021. And first on our list is the economic reports. We have 0 of those coming out today, but this is set to be a busy week. We have a lot of manufacturing coming up, as well as consumer confidence and import-export data. So look for those beginning tomorrow. The big board, our FinViz board, is kind of mixed. It's kind of a balance between red and green. Seems to be a pretty good mix between the dark colors and the light colors. So it's spread all the way through, with equities being roughly flat. Silver is down today. Gold is also down today, killing that streak we had last week. Silver retail is slightly up, however, as well as gold retail. The FinViz board, as you can see, as I had mentioned earlier, is pretty well mixed. The indices, with the exception of the Russell, are all positive, although they're not strongly positive. Energy is definitely down, with crude, both WTI and Brent being down. Gas and heating oil are down. Natural gas and ethanol are both up, however. The softs, again, they're kind of a mixed bag. They go all the way from the red to the black to the green. Grains are mostly in the same position. There's a little bit of red interspersed, but for the most part, they're pretty green. And then, of course, we get to metals, and metals are mostly having kind of a down day. Even as we look at palladium and platinum, which are in the green, they're not really that far into the green. So we've got gold and silver are both down 0.96 and 0.72% respectively, and copper is down almost a full percent at 0.98. So let's go into the economic calendar. So on the economic calendar for this week, as I had mentioned earlier, we do have quite a busy week coming up. Today is light with nothing scheduled to be released, but we do have tomorrow the NFIB Small Business Index, the Consumer Price Index, the Core Consumer Price Index, and the federal budget numbers are going to come out. With Wednesday, we have that Producer Price Index and the Beige Book that'll be released. Both of those are pretty important. But then Thursday, we really get into the big day with, again, we have our jobless claims, both initial and continuing, as well as the Import Price Index. Additionally, what's not listed is the Export Price Index as well. So both of those will be released. We have the Empire State Manufacturing Index, the Philadelphia Fed Manufacturing Index, the Industrial Production Numbers, and Capacity Utilization Rate. All of those are pretty significant numbers and are going to drive a lot of the investment outlook as we start moving towards the second half of this year, and even starting to move into next year. So we need to keep track of those, and I do have some stuff coming up that we'll be able to do some deep dives on. But then finally on Friday of this week, we've got the retail sales report. The retail sales excluding autos, consumer sentiment index, and business inventories. And what's important is, as we start looking at this, we have them kind of spread throughout the week, but the producer price index, the manufacturing indices, industrial production, capacity utilization, and business inventories, all of those are huge and are going to drive a significant portion of what we're looking at, and especially what we care about in terms of metals. So moving away from that, we have our overview of the 10-year Treasury rate, which is currently trading at 1.34%. That is slightly down from Friday's view of 1.35. However, it's still within that lower range of things. I'd like to see that up a little bit higher, but we'll see where the day goes and where the week goes. Last week we had these highs in the 2650 range, I remember earlier in the week we had that 2680 that we had gotten up to briefly. But as we start looking at this, we can definitely see a downward trend a bit. There was a little bit of a spike earlier today that got us up to 2618, and now we're down again to that 2610 mark, which we're still above 26. Although when I first woke up this morning and started looking at it, it was pretty low. I mean, we were in the healthy 25s, and that wasn't really a nice look. It didn't set my expectations that high. But as we start to look at this, we're definitely hovering around that VWAP period. Although the VWAP itself wants to be at roughly around that 2613, and really that's kind of where the price is wavering around. But let's take a look at the previous, and of course the intraday is going to be very similar. Both of them, as we can see, the price is right there. So we've got the current price at 2610, which is right between the previous day and the intraday VWAP. Now, gold was always our big player last week. We had a great week with the price continuing to kind of jump up. We went all the way from, starting out there, and we're definitely going in that upward direction all the way through. We had that same type of momentum that was going through right along through the second part of July 8th, 9th, and moving into the 10th. But now we've got kind of a different feel to it. And as we kind of look, we can definitely see that there is that descending motion that we're looking at. I don't know if this is going to be a permanent thing or a temporary thing or what's going on. There's some interesting economic dynamics that are moving right now that could have a distinct effect on gold. So we're going to kind of have to play that out. Now, when I apply the VWAPs over this, we're definitely still riding well below at 1798. And just checking the FinViz board quick, I see that we're actually at 1792. So we've dropped about $6. So as that continues to drop, we're definitely well below where the volume weighted average price is on all of our timelines. So we'll have to see if that continues through the day. As we can see with retail on silver, although I'd say that they're up, they're not up that significantly. I mean, on generic, we went from last week 31.48. We're now 31.55. We've moved up by 7 cents. With the Philharmonics, again, we're up of 25, 30 cents. The Maple Leafs, we're up a whopping 2 cents. The Silver Eagles, we actually kind of, it appears to have dropped by about 6 cents. So as we start to look at that, we can definitely see that there's some effects that are going in on the price changes, things of that nature. So it's probably a good idea to watch, because if silver continues to decline, it's very, very possible that the price itself of the retail that we're looking at could actually shift as well. So that could indicate a good buying opportunity, or it could indicate a good selling opportunity. And I hate to be wishy-washy, but with brand new price movements, whether it's going up or down, with it not necessarily tied to anything specific, such as like a Fed speech or anything like that, it's really difficult to figure out where everything is going. And especially over the next say 9 days, as we're getting ready to move into that delivery point, we're going to start seeing some weird activities as trades start to be settled, as people are taking delivery, as all sorts of different events that happen within the mechanics of the commodities market begin to take shape. And that's going to be the case for both gold and silver. So we're going to have to watch carefully and just keep that in mind, that this is kind of an anomalous month, and we're faced with the economic realities of what's going on. So moving over to gold, gold we can see is also up slightly. Not significantly. And again, as we start looking at the numbers between it, gold and silver are different just because of the scale that they operate at. But that Gold Eagle, the 10th ounce one, were 27.18, which is quite the number. That still blows my mind compared to one generic ounce at 18.89. So we're almost $1,000 over. I mean, that's not nothing. And you guys hear me gripe about that every day. But it just kind of reinforces the fact that, if you're going to go in on this, save some pennies and just, put off the decision for a while to purchase and get into something that's a little bit more reasonable at the 1 ounce rate. You'll do better in the long run. But we look at the gold, the Kangaroo at 1900, the Krugerrand at 1908, the Gold Philharmonic at 1922. We look at the Gold Maple at 1925. Last week it was at 1902, and the week prior to that was at 1910. So we're riding higher than even it was 2 weeks ago, which is pretty decent. The Gold Eagle is at 1977. That's up $26 from the previous week, and of course it's up just about $10 over 2 weeks ago. And the Gold Buffalo at 2017, so that's back over the $2,000 mark. It was at 1995, and previous week at 2010. So that all kind of brings up what's going on in retail. As you can see, that's also a mixed bag, but prices are generally pretty favorable, especially if you're getting into it. They're trending upwards, which is nice. So you have to kind of look at that and go from there. So this week, or this report, we covered our economic condition, the markets, where they sit. Gold and silver are both down, but it's indeterminate on exact reasons. So it seems to be a confluence of a lot of different reasons. And we looked at the retail, which still, despite the down nature of both the markets on the spot, seems pretty up. So for next week, or the next episode for tomorrow, we have coming up those new reports that are coming out, and we're going to see where things change. So I encourage you to tune in. I would encourage you to hit the like button, hit subscribe, as well as the notification bell if you want to know when I've uploaded again. But until next time, happy stacking.